Hello friends, so here I'm going to show you the fundamental analysis of one of the best company who is dealing in the oxide and chemicals and create basically manufacturing the lead for batteries. So you can see on the screen here the company's detail. Okay, so this is the latest news for the company. Is the leading secondary lead smelter in India and produce the highest quality of lead and lead alloy and PVC additives. We are the supplier to our customer who are mainly battery manufacturer, chemical manufacturer, PVC extruder and molded product. POCL continuously make a significant investment year on year for increasing their environmental standard, and POC strength is well qualified and dedicated workforce, strive to maintain safe and conducive work environment. You can see about the all companies award, newsletter, investor relation, career. POCL is India's leading and India's alloy and plastic additive producer, incorporated in March 1995 as a public limited company. You can see technology update. R&D company is also having R&D facility for new development, continually improving the quality management system. You can read more about the companies PVC, Civilizer, smelter division news. Okay, and you can also, so let's see the one fundamental of this company. So company, you can say, is principally activity converted lead scrap into various form of lead metal and alloy. Company is carried into the smelting of lead battery scrap to produce the secondary lead metal, which is further transformed into pure lead and specific lead alloy. Further, company also manufacture zinc metal and zinc oxide. POCL, you can also read the key information about the company. Growth driver, okay, increased 22% over the previous year. Lead metal and alloy witness increase. Advancement in POCL has been recognized India's first and only London Metal Exchange registered. Okay, 9997 lead brand. Capacity expansion, companies expansion, doing the expansion of the intended to set up copper recycling and melting facility at Andhra Pradesh. So they are doing the expansion. So let's see, there's some information like market cap 239, current price 411, high 499 and low 180. Stock P is 13.8, very good. Low, good stock P. Book value is 278, dividend 0.61, very good. Return on capital 7.51, low, no problem. Return on equity 6.96, no issue. Face value 10, ultimate 6.28, very good sign, sir. This is a very good sign. You have to check ultimate 6.28, very good sign. Number of equity 0.58, growth factor T, biotricity 3, no issue. Solid check 0.52, very good. Company is reducing their equity. Reserve power, you can say reserve is 1.2 of their debt. Price for 0.65, very good. Price for 0.65, very good. Asset power, you can say asset is 21.9 than their debt. This is higher, 21.9. Now you can see here the total maximum of the chart. Company is showing good rounding bottom pattern and cup with handle pattern for the long term. Maybe if someone buy it here, it can maybe cross to 700 in near period, but check with your advisor. No pros, cons. Companies might be capitalizing their interest cost. Dividend payout has been lowest. Debt days have been increased from 29 to 39 days. Okay, Pidilite, Aarti, Deepak, Alkyl Amine, Naveen, Linde, Pondy. All these are doing same kind of business, but only Pondy is having less price to book value. And if you check here the quarterly result, company is showing very good quarter here, 63% growth from last June, because maybe last June full lockdown was there, maybe because of that this year is showing 63% growth. But if you check March, it is showing 12% growth, very good sign. Okay, and even you can say expenses also very high. Maybe you can say the margin is low, company is having low margin, but no problem at all. Company is basically improving their margin quarter on quarter. Other income is also very good, and interest is 1.65, very good sign. Okay, profit before tax 11.6. If you compare to last 2-3 quarters, this quarter is having very good profit before tax. And profit and loss, you can see company's profit loss statement. Sale is growing every year. You can see every year you will see positive sign, except this year because of coronavirus. Very good sign for the company. And if you say the expenses, very good, high expense, but margin, because of that margin is low, 6%, 3%, 2%, no problem at all. Interest is also reduced by the company, 12, 11, and now this is 5, very good sign. Depreciation also very good, managed by the company. Profit before tax 7 before 10 year ago, but now it is 23 crore every year, very good sign. Net profit is now 17 and total EPS is 29, and it will be increased in coming year. 10-year compounded was 7%, but stock CAGR is 27% for 10 year, very good sign. Okay, and you can also see here that balance sheet, company equity capital, company you can say before 10 year ago the equity capital 10.11, but now it is 5.81. Company reduced their equity capital since last 10 years. Reserve is growing exponentially. In 2010 15 crore reserve, but now it is 156 crore. I think 10 times of their since last 10 years. Borrowing is also, companies managing borrowing very well. Liability is also very good, no problem. This company can reduce the liabilities coming year. Fixed asset, you can also see companies reducing their increasing the fixed asset every year. Investment, there's no investment for the company. If you check other asset, companies having cash crunch now because of some coronavirus issue, and having the inventories very high. Trade reserves are very good. So these things increase the company's credibility. Cash crunch, you can see this year there's a negative cash ratio. You can see debtor days basically increase, not good sign. So inventory days also increase, days payable also improve, cash cycle also improve. So you can say because of this coronavirus, how company is impacted. But if you see the earlier quarters, the debtor days was 1731, means that there is a full probability that the stock price will good in the next coming quarter when the lockdown will totally ease. If you see promoter holding, 2018 promoter was holding 46.25, but now it is holding 48.7, increased their stake. Public holding is very intact, but they are reducing, and maybe promoter is buying the stock. Very good sign for the company. You can see the all recent announcement here, annual report you can see here, okay, and rating update. Hope this video help you for the decision about the Pondy oxide. You can always check with your advisor before buying any stock.